Goldcorp reporting breakout numbers in the fourth quarter of 2017. So can they maintain the momentum here in 2018? Joining me today is David Garofalo. He's the CEO of Goldcorp. Welcome back, David.
Hey, Daniela.
What was the game plan and strategy last year? And can you keep the momentum from these incredible numbers you saw in the fourth quarter here?
Well, the number one objective in the last year and a half was to stabilize our operations, get into a consistent performance pattern, and drive costs out of the system. And we launched a program to deliver $250 million of sustainable cost savings out of our existing business a couple of years ago. And we're largely complete on that. And that's helped drive down our all-in sustaining costs down significantly, and will further drive cost performance going forward. But we have consistent production performance from our operations now. And through very minimal capital investment over the next 5 years, that production base is expected to grow another 20% from existing operations.
What are you looking to bring your all-in sustaining costs to?
Down to $700 an ounce from when we launched this process, it was $850 an ounce. So a big chunk of that is just growing the denominator from 2.5 to 3 million ounces of production over the next 5 years. But also it's that sustainable efficiency program that I talked about earlier on.
Now, fourth quarter results more than doubled from the same period last year, but it wasn't reflected so much in the stock price. So what do you think it's going to take to get investors to really get interested here?
Well, we're running a good business. We have a very clean balance sheet, low debt levels. We have the highest credit rating within the gold industry. We have growing production in an industry that's seeing shrinking production. Ultimately, we think investors are looking for leverage to the gold price. And the way to measure that is grow your production and your reserves on a per share basis. And we have an ambitious program to grow both our reserves and production by 20% over the next 5 years. So it's providing that leverage proposition that investors are looking for in gold equities.
You know, one thing I found interesting is that your revenues in zinc actually even jumped from, I think, 6 to 12%. Did you find this interesting?
Well, it was a very good year for zinc prices. Right. They essentially doubled in the last year, and we produced quite a bit of zinc as a byproduct at our Peñasquito mine in Mexico. And so we do that in a very cost-efficient basis, but it helps drive down our all-in sustaining costs on a per ounce basis as well.
Do you plan to continue to make this a focus in 2018, zinc, because of the interest we've been seeing?
Well, we don't have the discretion to accelerate our production of zinc. Zinc comes in the normal mine plan and normal sequence from our Peñasquito mine, but our volume in zinc production will actually start to leap in 2019 as we get into higher grade zinc zones within Peñasquito, just in the normal course of following our block plan.
David, you've also been one of the CEOs who's been most vocal about bringing change to the industry. I know you're working towards a zero water initiative. Goldcorp is the backer behind the Disrupt Mining Challenge that takes place during the PDAC. What kind of change would you like to see happen here?
Well, historically, mining companies have delivered on cost performance or driven on efficiency just by making their equipment bigger. And I think we've kind of reached the limit of what we can do there. We actually have to start to drive step changes in our cost structure. And so we're commercializing 4 different concepts within our existing businesses here that are driving down our water consumption, driving down our energy consumption in a meaningful way by applying technologies that are available to general society, like artificial intelligence, the Internet of Things, blockchain. Right. We're looking at driving efficiencies in transacting of our gold sales through the blockchain. We're helping to launch a gold-backed currency to participate in the blockchain this quarter with Tradewinds and Royal Canadian Mint in partnership with them. And that will drive potentially millions of dollars out of our transaction costs and result in more efficient price discovery for our gold sales as well. So there's a whole host of things that are getting commercialized this year that could make a meaningful impact on the cost structures and the overall value of our underlying businesses.
Do you think the industry as a whole is receptive to blockchain, or do you feel there's still resistance?
Well, I do think that blockchain inevitably will overcome us like the internet did. You know, I think everybody will be using blockchain not only in the context of financial services transaction, which is where it's exclusively focused right now, but I'm talking transactions on merchandise and services generally to drive out transaction costs and also help track the provenance of our transactions, whether it's our gold, where it's being sourced, whether we're procuring supplies from ethical providers of supplies. That's what blockchain provides, is that integrity in the transaction process that currently is not available.
David, finally, need to get your thoughts on the state of the gold price here. Are you feeling bullish?
Well, I think gold's held in like a champ the last couple of years, in spite of the fact that the Federal Reserve and other central banks are starting to see nominal interest rates go up. The reality is gold is a barometer of inflation, and we're starting to see inflation percolate again. We're seeing tighter labor markets, we're seeing the benefits coming from improved productivity pretty much peaking out. So we're starting to see cost inflation in society generally, and gold is a barometer of that. In a rising nominal rate environment, if inflation's going up as well, real rates still go down, and gold does well in that context.
Right. But aside from the rising interest rate environment, we did have a lot of geopolitical tensions, and many people expected gold to rally more, so to really kick in as a safe haven. Do you think that the interest we saw in Bitcoin was kind of killing the interest in gold at that time?
Bitcoin is small potatoes in the grand scheme of things. So the entire market's worth a little over $200 billion. We trade that on a daily basis in the gold market. The entire gold market is $8 trillion, and we're adapting quickly by adopting blockchain in the sale of our own products. So we think we'll actually displace the Bitcoin in terms of providing a physically backed currency to participate in the blockchain.
David Garofalo, best of luck, continued success. Thank you.
All right, thank you.